Welcome everybody to today's episode of 15 Minutes of Finance. We are doing Market Mover Friday. Big day today. Markets dropped 2%. We're going to talk about why that could make you wealthy. Stick around. You'll learn something today, I promise. Okay, we are starting with our term of the day, which is obviously by the GOAT. When we have days like this, guys, we talk about the GOAT, Mr. Buffett himself, Mr. Willionaire Warren is what I call him because he's got $1 billion. And by Willian, I just mean it's an unfathomable amount of money from investing. And Warren Buffett says, I make no attempt to forecast the market. My efforts are devoted to finding undervalued securities. And that is a huge theme of what we do here. We're obviously in growth mode. We love it when we have clients who are trying to hey, let's grow our money. Let's grow our portfolios. We also deal with a lot of retirees. That's not what we're talking about today. We're talking about you, the retail investor. I'm sure we have some clients who listen to this, but it's about you today, okay? And Warren Buffett is talking to you when he says he doesn't try to forecast the market. It is a big, difficult mountain to climb when you're trying to forecast the markets. Okay, I have a decade of experience doing this. Okay, we have high-level designations here: CPAs, CFPs, CMAs, CRPCs. We have all these designations, soon to be CFAs. We have an immense amount of education in this, and predicting the market is extremely difficult. It's extremely difficult. So you don't have to do that to become extremely wealthy. All right. And I wanted to talk today real quick. The big difference between rich and wealthy is immense. The chasm between them is massive. And if you really want to be wealthy, which is better than being rich, there's only 4 ways you can do it. Okay. You can be given it, no shame in it. I'm a big, nepotism, big nepotism guy. I would hope that one day I am so wealthy that I'm able to give my kid a head start by passing down an inheritance. Okay. So that's one, you're going to be given it. The second is you can make it, right? You're going to start a business and then eventually you're going to sell it, and that'll be a nice little nest egg. That's how you build wealth. You can steal it, which is obviously the unfortunate way of doing it because now you're living in secrecy your whole life, can't really enjoy the wealth to its maximum potential. And then the last one, which is what we're all about, which is building it. Okay. If you have a regular job, I've said this story maybe 9 times. I have seen people who worked fast food in the last 50 years who have many millions of dollars. Okay, many millions of dollars. We're talking minimum wage for decades, and they have millions of dollars because they invested. Okay, they didn't worry about what was happening. Like today, we're down 2%. These McDonald's millionaires I'm talking about, they rode the wave. Okay, and that is what today is all about: building wealth for you, buying the dip. If you are in growth mode, okay, not everybody is, but if you're in growth mode and you're not ripping on this dip right now, I know this is cheesy. It's actually hummus. You are missing out. Okay, the biggest days, the biggest positive days in the market happen after the declines. Okay, all you have to do is go look at the S&P 500 in April, May, June, and June of this year to see. I mean, we had a 9% day. I think we even had an 11% day, but I didn't check before this, so I'm in my head. I think we had one. That's a top 5 day all time ever. Right? And if you were like, oh, I'm on the sidelines, I'm worried about this tariff talk, you would have missed 11%. You can't recover from that. Well, I mean, you probably can recover from it, but it's very difficult to recover from it. All right? You got to participate. You got to rip on the dip. All right? And we're going to go over the news here and exactly what happened. But, I mean, today was more tariff talk. All right? And if you go back and listen to our episodes, right, we're on YouTube now, but before we were just Spotify and Apple Music, Apple Podcasts, we were talking about this. If you're not buying the dip off of this tariff talk, you are missing out on some great wealth building opportunities. Okay. All right. Let's read the news here. Stock indexes tumbled Friday after President Donald Trump threatened massive tariffs on China, reversing early gains that saw the Nasdaq hit a fresh record high. The tech-heavy Nasdaq sank 2.7% in recent trading after setting a new intraday record for a second straight session. The benchmark S&P 500 and blue-chip Dow Jones Industrial Average were down 2.1 and 1.5% respectively. a day after the three major indexes closed lower. All three indexes are on pace to post weekly declines just because of today. Today was big. I mean, it's 2%. It's 103 right now. So what? Let me take my airplane mode off and we'll just look at this real quick. So about 2.4% we're down. And just make sure that doesn't update. Yeah, 2.4%. That's a big day. I bought for clients today. All right. And buying on the way down is still better than trying to wait to time the bottom. You will never know. You won't know. Okay. You might get close and you might even be right once, but you are almost never right consistently or never right twice. Like lightning doesn't strike twice kind of thing. That's what it's like trying to predict the bottom. It just doesn't happen. And it's mentally exhausting trying to do all of that. So it's better just to have that strategy of DCAing on the way down. Okay. All three indexes are on pace to post weekly declines. Writing on his Truth Social network that China was becoming hostile regarding rare earths, Trump said that one of the policies that we are calculating at this moment is a massive increase in tariffs. Huge. Massive increase. Huge. Obviously, that was terrible. So sorry. We might edit that part out. Massive increase on tariffs on Chinese products coming into the United States of America. NVIDIA shares set a new all-time high in early trading, but reversed course after Trump's post and recently were down 2.7 shares of rival advanced micro devices. I don't know what this is. Investopedia, get this stuff correct. AMD also sank 6%, while Nike and Amazon, who would stand to suffer from increased tariffs on Chinese-made products, dropped about 4% each to lead the Dow decliners. In addition to the sharp downturn in stocks following Trump's post, the 10-year Treasury yield, which affects borrowing costs on all sorts of loans, fell further to 4.05% from 4.14% at Thursday's close. Bitcoin was at 117,300, down about 5,000 from its high of the day. The U.S. dollar index, which tracks the value of the greenback against a basket of foreign securities, slipped further and recently was down 0.6% to 98.95. Gold futures, which have soared more than 50% this year, resumed their ascent after closing back below $4,000 on Thursday. And they're at about $4,015 right now. All right, I'm done reading this news. None of this stuff matters right now. Applied Digital's up 15%. There you go. Qualcomm's being investigated by China. Those are the two big equity positions I would say that are worth mentioning. There is value in understanding what the gold, right? We invest in stocks. We also do some precious metals and commodity investing, but the gold standard, and I don't mean like premium, the best of the best. I just literally mean gold and the standard at which it's valued in the economy. It is an important metric to use, right? A couple episodes we talked about PMI by the ISM and by the S&P Global and how PMI is an excellent measure of the economy's contraction and expansion. Gold is also a really good tool for inflationary measures. So again, a couple episodes ago, we talked about how stagflation might be a really, really big issue. And if gold keeps increasing in prices, a lot of people value gold. If gold goes up, that means inflation is increasing. So they view that metric like, oh, a lot of people are going into gold because they're worried about this inflation, stagflation situation right now. I don't really have an opinion yet. I need to see how the central bank handles lowering rates, right? I think they meet in like a week and we can get a much better idea. Hopefully the shutdown ends and we can get people back to work in the government, the federal government. The SEC needs to get back to work. The IRS needs to be pumping stuff out. And also the Fed. We got to know about these interest rates. That is the number one dictator and indicator of what's the market's going to happen for the next 3 months. Now, obviously, we didn't predict the shutdown. Hopefully, at the very least, they get a temporary pause on any of the disagreements that the left and the right are having. God dang it, dude. I hate politics so much. I just hate how it's so much about conceding, right? For me to get 1% of what I want, I have to give you 80% of what you want. And then the other way around, because I feel bad about last time about having to do 1%. Now I'm going to make you do 1% to get my 80%. And it's just this terrible back and forth that honestly loses people money constantly. The only people that make money are the constituents in the positions. So what am I saying? What the whole point of all of this, right? When you buy the dips, and you should always have cash on hand ready. Okay, when you buy the dips, you do two really important things. Okay, one, you participate. And you cannot win the race if you are not in the race. That is the easiest thing to do and the hardest thing to handle. Okay, I think of one of our biggest clients from April. Oh, I don't think I can put any new money in the market. I'm scared. Big NVIDIA believer. NVIDIA was $90, right? And now last week, he's talking about, why don't we put $1 million in NVIDIA? Why don't we put, why don't we buy AMD after it's up 25%? It's like this, something happens internally with humans. It has nothing to do with great investors and bad investors. Human nature is when things are doing really, really well, you want to play, but it's at the top. It's at the top of the mountain. Okay. And when things are at the bottom of the mountain, people don't want to participate. They're like, oh no, it could go even further. It just doesn't. There's something humanly, it's called loss aversion, but there's something about us that makes it so making money in the stock market is so difficult. And that, honestly, that's part of the reason why I think there's value in hiring someone like me. And I don't mean actually me. I mean a fiduciary advisor somewhere else. Again, fiduciary buzzword, but someone who just actually loves what they do and has opinions, and they don't outsource stuff. There's somebody responsible at the firm for when things go well and when things go bad. Okay, all these financial advisors you see, maybe not all, but a majority of them, talking 80, 90% of them, they outsource stuff. They literally just make money off of client money, and it's immoral. I'm ranting again. Me being one move adjacent to investors' money really gives me a advantage as an investor investing for them, because I can see things way more objectively than they can. And it's just true. When you manage your own money, it's subjective. It is very difficult to use logic and make discerning decisions. It's just very difficult. Okay, guys, that is pretty much it for today. If you're not buying the dip, and I mean anything, okay, on anything, there are great companies right now that are 5, 6, 7, 10% discount than they were yesterday. And it's because of an outside force like tariff talk. Okay? Please take that education that I'm providing you, go do your own research, and consider trying to not be loss averse, which in its purest definition just means that losses hurt 2 times as bad as any gains could possibly be. Okay? Unless you are stealing wealth, unless you are making wealth, starting a business, or given wealth, the only option is to build it. And the best way to build it is over time, slowly, and trusting the process that you guys have a right idea. Okay? That is it for today. As always, invest early, invest often. We'll see you next time.